I'll say it. I'm not afraid. You're afraid. I'll freaking say it. Today's price action sucked. Now, I'm sorry for being a little bit crass, but if I'm being completely honest with all of you, I've tried to film this video multiple times, and I'm just having a lot of technical issues. It said it was recording, it wasn't recording, then it did record, and it was a corrupted file. So I'm at that point in the day where seemingly I can't do anything right for my content creation job, but also simultaneously I can't do anything right with my trading job because, as I said, the price action sucked ass, and my portfolio is getting its balls kicked into its pelvis. I know there's no way to verify this, but my previous attempts at this video, I truly feel as if I gave better insight and breakdowns and commentary, but based on the day that I'm having, and I'm having to film this again for the 19th time, you're gonna get what you're gonna get, and you're gonna like it. So here's the plan. I'm gonna break down what happened in the market today, and I'm gonna complain about it. Then I'm gonna explain what to look forward to for the remainder of the week. I'm also gonna complain about that. And then I'm gonna give you a breakdown of why my spidey senses are kind of flickering, and I think some weird things are happening, and most likely I'll find another thing to complain about. That's just what the update video is going to be today. Normally I would say like, subscribe, all that stuff if you're going to enjoy it, but hey, you're going to get what you're going to get, and maybe I'll be better in the future. So with that, sit back, relax, and buckle up, Buttercup, because we're going to rip it. By the time today's roller coaster of a ride officially stopped, we got off and finally finished puking, here was the official headline. S&P 500 falls marginally today, Tuesday, as tariff volatility subsides. Another very fair and accurate and probably more exciting headline was S&P 500 absolutely destroys Mateo's portfolio, and this price action is horrible. And if you are more of a visual learner, take a look at the heat map. It looks like Rudolph the red-nosed reindeer puked all over everything. I'm seeing a lot of red, I'm seeing a lot of green, I'm seeing a lot of gray, which means that there was in fact no nice trend today. Speaking of trends, look at how horrible this price action is. The S&P 500, we popped to start. We got a weird update that I'll be going over. We puked all the way down to the close. We bounced, we puked, we bounced, we puked. And it wasn't just this, it was also what we saw in the options market. This is the delta flow of the S&P 500. Bullish, bearish, bullish, bearish, bullish, bearish. Looking at the Mag 7, some of your favorite equities, same thing. Pump, dump, pump, dump, pump, dump, in and close. We are all over the map. Now, one of the crazy things that happened today was right here around 10:17, we were looking good. In fact, it looked as if we might be getting a daily bar breakout, taking out yesterday's high, and I myself was betting on that. I was excited about it. I know a lot of people in chat were. And then right at 10:17, man, oh man, was Lady Luck not on our side. EU expects US tariffs to stay as talks make little progress. Those two words, little progress, coming out at 10:17, and the market was like, this ain't good. The EU and the US made scant progress bridging trade differences this week as officials from the administration indicated that the bulk of US tariffs imposed on the bloc will not be removed. The EU trade chief left the meeting with little clarity on the stance, struggling to determine the American side's aim. He met for about 2 hours with Lutnick and Greer, who happens to be the Commerce Secretary and then also the trade representative. The US officials indicated that the 20% reciprocal tariffs, which have been reduced to 10% for 90 days, as well as other tariffs targeting sectors including cars and metals, would not be removed outright. That's what came out an hour into the trading session. Obviously, the market did not react finely to it. And then about 20-ish minutes later, we did get this update from Trump, which the market's reaction was strange. So feel free to check this out on his Truth Social, but he was basically talking about how the farmers are great, China sucks. He negotiated, is probably a better way to say it, negotiated a deal with China back in his previous administration, and then Biden completely messed it up, and now he's coming back, and basically the US will protect our farmers. So obviously there's really no policy here, and this is why I'm saying it's strange, is because there's no policy, there's no tariff update, there's no trade war update or anything like that. He's basically just saying we're going to protect our farmers, and the market reacted to that, as in the bots didn't know what they were doing because they reacted, the market dropped again, and then we came right back up when everyone was like, why are you reacting to that? Another strange thing that happened today was Trump is shredding his credibility with allies while China benefits, according to the former National Security Advisor, John Bolton. Now, obviously, I know he's no longer part of the administration, but the current administration, we are hearing from like sources familiar with the matter, whatever that term is that they commonly use, especially with people that are kind of on the trade war team, if you will, that there's a lot of infighting and back and forth. And we kind of even see that publicly. We're getting all these interviews that one guy says one thing, then the White House says, what are you talking about? Then another guy does an interview, or the same guy does an interview saying the exact opposite thing. We just live in very, very confusing times. And that's exactly why this price action is horrible. The SPY ended the day slightly red, dropping 0.3%. The Qs were actually slightly green, going up about 0.1, and that was because Palantir rocked, gaining a very impressive 6.2, and then Netflix also up 4.8. So I would say those two equities are the big winner of the day, while it feels like the rest of everyone paying attention is kind of a big old loser. Speaking of paying attention, here are the major things to pay attention to for the remainder of the week. Tomorrow, Wednesday, April 16th, an hour before the market opens, we're going to get retail sales, which is going to give us an idea of the strength of the consumer. Then right after lunch, around 1:15, we're going to be hearing from the guy who controls our money. I'm talking about the Fed chair, Jerome Powell. He'll be speaking. Yes, I'll be doing a specialty show for that. And then to conclude the week, Thursday, April 17th, the normal initial jobless claims. And then we're going to be hearing from the ECB, where they might be giving us some clarity of what's going on with the trade war. I do want to give you a friendly reminder that the market's going to be closed Friday, April the 18th, in observation of Good Friday. But of course, the fun does not stop there. We are in earnings season. So I did notice an interesting trend that I want to point out to all of you. Wall Street's trading revenue powered by tariff uncertainty. Goldman Sachs is the latest big bank to report that increased trading fueled its profit. Bank of America tops analyst estimates on better than expected interest income. Citigroup results exceed analyst estimates on gains in fixed income and equities trading. Bank trading desks are minting money from Trump's tariff chaos. So basically, uncertainty is high, volatility is high, people's desire to trade, or I guess compulsion to trade, at an all-time high, which means people running the trading desk are making an absolute killing. Now, I should note that kind of puts an end to the chapter on the financial sector update, but we're about to start with the tech sector. Before the market opens tomorrow, we're going to hear from ASML, which is the machine designer for the semiconductor industry, such as AMD, NVIDIA, Micron, Intel, all that stuff. So a very important one. And then so is TSMC, who's the fabricator for all these processing chips. So between Wednesday and Thursday, we're going to know what's going on with semiconductors. I should also note that after the market closes on Thursday, we're going to hear from Netflix, which I would argue is a pretty good bellwether for what in the world is going on with tech. So obviously, I highly recommend you pay attention to all of those, but I would love to hear from you in a comment below. Taking a step back and changing up gears a little bit, do you think that the bottom's in? Very honestly, I did. I thought when we started to rip on Wednesday on Trump's announcement, bottoms in, and we're going to get this massive V-shaped recovery. And I wasn't the only one. Check this out. Retail investors who've only known bull markets are buying the dip because obviously that was a good strategy. Historically, when you see these big dips, that's what you're supposed to do. But right now, I have to admit, my spidey senses are tingling, and we're getting even some other commentary. This is from Goldman Sachs, a piece of their research, and they looked at previous bear markets and they split them up into three separate buckets: structural bear markets, cyclical, event-driven. Event-driven would be something like Rona, cyclical is more seasonality, and structural is kind of arguably what we're seeing now, where there's a lot of stress of what in the world is going on in the fixed income market, the credit market, the repo market. But yes, there's a lot of structural stress. And if you look, on average, those are the worst drop-offs. The average bear market drops about 35%, but structural bear markets, they come down in excess of 50, and we are roughly here. So yes, there still might be more pain to come, and that's exactly what I want to ask you. But just to give you a couple of my thoughts and my insights here, I think this is a very, very extraordinarily difficult market to trade in because it's not you reading price action. It's not looking at the DOM. It's not looking at options flow. It's not looking at option structure. It seems as if it's randomly attributed to updates that we get from the administration. Yes, sometimes we get positive ones. We have more than 15 trade deal proposals that are actively being considered. Great. The more that happens, as the details come out, most likely going to be a bullishing. The issue is the major one that we all care about is what's going on with China. And even though the administration is saying Trump is open to a deal with China, there's nothing's going on. Like, apparently the two sides aren't talking. There's too much ego. There's too much hubris. So if it keeps going that way, yeah, look for downside pressure. And then all of a sudden, if we get a random update that, yep, they're scheduled to talk, the market's going to rip. It's such a high octane flip of the coin, and we just don't know what side is going to come up. Is the bulls going to win? Is the bears going to win? Because right now, I don't think there's a traditional way to interpret the market to get an idea of what's happening, as we're all just sitting around waiting for a binary event to play out. And in a weird sense, we're kind of seeing that in the market. Obviously, we puked, and then on Wednesday, we had a big rip, a historic gain. And since then, 1, 2, 3, 4 days, nothing's going on. Inside day, slight breakout. Oh, we're going to hit the upside gap. Oh, nice, a continuation. And then guess what? Another inside day, and we have not broken the high or the low of Wednesday, April the 9th on the day of that announcement, which tells me that the market has no idea what it wants to do. As I alluded to, I'd be the first person to admit that on that announcement, I thought the next day, rip. The day after that, rip. I really thought we were going to see this hardcore V-shaped recovery, but the fact that we're not is telling me, at least, and maybe I'm reading it right, maybe I'm reading it wrong, that something else is going on underneath, and there's still a legitimate amount of concern for where are we going next. Or maybe I'm just frustrated and I'm being impatient, and this truly will be a V-shaped recovery, and I'm just being a little bit too antsy and angry that I had to film this video over and over and over again. But just to be fair here, right now I should let you know that obviously we have not broken this range. I am, like many other people, looking for this upside gap fill, but I should let you know that all the major weekly, monthly, and quarterly option expiration dates for the overall market, they're all still put dominated. I truly believe the day after this announcement, I thought, okay, cool, we're going to switch from bearish put dominated to bullish call dominated, and it simply has not happened yet. Clearly, the big money within the market is looking for something else to occur that's just not happening yet. So with that in mind, I would love to get your thoughts in a comment below. Do you think that the bottom's truly in, or do you think that this is just a brutal fake out? Seriously, I would love to hear from you in a comment below. And obviously, I appreciate you making it to this point in the video. I appreciate all the good vibes. I'll catch you in the show tomorrow, and also the update video that we'll post some point tomorrow evening. That's what I have for you. Thank you so much.